Changing a country isn't easy, but change is inevitable. And the choices we make today will shape our country for generations to come. That's why we've published our first book from Australia Institute Press. What's the Big Idea offers 32 ideas for a better Australia, from leading thinkers such as Bob Brown, Sally McManus, Dr. Emma Shortis, and Professor Brian Schmidt. The essays are a roadmap and a reminder that the solutions exist. Australia just needs the courage to implement them. Visit australiainstitute.org.au or follow the link in the show notes to order your copy of What's the Big Idea today.
G'day and welcome to this special crossover episode of Follow the Money and Dollars and Cents. I'm your host, Ebony Bennett, Deputy Director of the Australia Institute, and after months of anticipation, the Reserve Bank finally cut interest rates this week.
Mortgage relief is finally on the way for millions of Australian homeowners.
Well, today the Independent Reserve Bank decided to cut the cash rate to 4.1%.
Inflation has eased over the past 3 quarters, and in the most recent quarter, a bit more than our forecasts had anticipated.
There's been a consistent drop in the core inflation figures and quite a sharp drop as well, so it's gathering pace.
This is very welcome news for millions of Australians. This is the rate relief that Australians need and deserve.
But we cannot declare victory on inflation just yet.
Now, we know that it won't fix every challenge we have in our economy or in household budgets, but it will help.
It'll bring modest relief for Australian mortgage holders, but is the economy really out of the woods yet? And who should get the credit for falling inflation? I'm joined by Australia Institute Chief Economist and host of the Dollars and Cents podcast, Greg Jericho. G'day, Greg.
Hi, Ebony.
So the Reserve Bank has finally cut interest rates on Tuesday. Why did they decide to do it now, Greg?
Well, because they'd finally started listening to me. I had been calling for a cut for a fair while. Look, I think essentially the economy got to the point where they really had no other option. We're seeing a lot of commentary that, they were pressured to do this and it's all political, and we might get to that later. But really, one of the interesting things about the decision is on the day they also released their latest thing called the Statement of Monetary Policy, where they put out what are all their estimates for economic growth over the next 2 years. And pretty much they were downgrading a lot of stuff for the next 6 to 12 months.
So when you say downgrading for a layperson, the economy's worse or
slower,
better?
Yeah,
slower.
So like last November, when they last had a bit of a peak, they were thinking that by the middle of this year, GDP growth would be 2.3%, which, to be clear, is pretty pathetic. But now they think it'll be just 2%, so even worse. They think how much households are spending is going to grow by less than they previously thought. So basically, over the past 3 months, they've looked at everything going, geez, the economy is a bit worse than we thought. But also, inflation has come down faster than they previously thought it happened. So you kind of put those two together and it's like, well, if the economy is slowing, what do? You cut rates to try and give it some impetus. And because inflation has come down slower, they're not so worried about that. Put that all together and you get a 25 basis point cut.
And obviously the thing that most people are talking about is, what does this decision mean for anyone with a mortgage?
Yeah, look, I mean, it's not huge. Let's be honest. It's a 25 basis point cut. So if you got a $600,000 mortgage, which incredibly is kind of the average sort of mortgage, or even a bit lower than the average mortgage in Australia. And if you're in Sydney, you're actually looking at around $800,000. But if it's a $600,000 loan, you're looking at about $102 less in your mortgage, saving $102 a month in your mortgage repayment. So, it's not nothing, but it's not like, I'm suddenly flush with cash.
Yeah.
It's undoing a very little bit of the damage. We've gone from the cash rate starting at 0.1%. It went all the way up to 4.35% and now down to 4.1%. So we're still a lot higher than we used to. And, most people are going to just think the best thing about this is actually, they're no longer hitting us. They're at least, helping us.
Giving
now.
us a rest.
Yeah.
Is there a case to make a bigger cut than the RBA went for?
Look, I think so. And it wasn't a surprise that they only did a 25 basis point cut. That's generally what the Reserve Bank does. They generally go up or down by 25 basis points. When I say 25 basis points, that's basically 0.25 percentage points. But
Yeah.
economists like to say 25 basis points because it all gets confusing if you're throwing around percentages and percentage points. Generally, they do 25 basis points unless there's real emergency periods like the GFC, like the pandemic, things like that, where
Yeah.
they think, cripes. And we're not really at that stage. But what we know from pretty much the past 25 years is that generally interest rate cuts come in pairs. They've never, after a period of raising interest rates, when they start cutting, they've always cut two in a row. And generally a few more after that as well. So it would be very weird for them just to do one cut and then go, that's it. So I think they didn't want to do a big cut straight away. They want to do it, so let's just dip our toe into the water a bit. But I would suggest, even when you look at these figures, there should be more cuts to come.
And is that because it's kind of a blunt instrument and it takes a little bit of time to wash through the economy? Is that the reason for that kind of approach?
Yeah, and one of the things we often sort of talk about with interest rates is that they kind of have the brakes of a Ferrari and the accelerator of a Model T Ford. It's like when you raise interest
That's
rates.
such a good description.
When you raise interest rates and put that brake on, people feel it straight away. It's like, oh, crap, because one of the things is banks, when they raise their interest rates, you can't avoid paying it. You have to pay it. And when they cut them, not only are sometimes banks a bit slow in cutting, although not this time, but also often people are a bit like, actually, I'll keep my repayments where they are because, I can cope with that, and maybe that means I pay off a bit more interest. And that means actually, all that money that we want to be going out into the economy isn't going out in the economy. So generally the Reserve Bank are like, okay, we'll do another cut and then another cut. And then it gets to the point where people are going, actually, I am getting the benefit of that.
Yeah.
So that's kind of why. And it's also why when we've seen in the past, when there have been emergencies, they haven't just done a 25 basis point, they've done like 100 basis point. Let's cut a whole 1 percentage point because to really get across to people, hey, we want you to actually go and spend money because we need it.
I want to be very clear that today's decision does not imply that further rate cuts along the lines suggested by the market are coming.
And this has been described as a bit of a hawkish cut. What does that mean?
So hawkish in the sense that, hawks are often, we want to raise rates and really be really tough on inflation. So they're kind of doing that of, we've cut it, but we're still being really tough on inflation, but at the same time putting out figures that go, yeah, by the way, we probably are going to cut more. So it is that kind of weird sort of a cut. If we are going to cut rates, do you kind of signal you're going to cut more rates? Which is kind of odd because, it was a bit of a hawkish cut, but also you had, at the same time, Michelle Bullock at pains in a press conference say, no, this doesn't mean we will cut again. We might just leave it at 1. And everyone's going, really? If you're Reserve Bank head, you can't say, we're going to cut again next month. So it's a case of the trying, I think, a bit to straddle two lines of going, we're still very vigilant on inflation. So that says what? You're going to raise interest rates again? I don't think so.
Yeah.
But also letting us know that actually there could be more cuts coming.
So there's a bit of a difference between what the figures are that they're basing their decision on and the rhetoric that's coming out, I guess.
Yeah, I think if we hadn't had the past 2 years of high inflation, if we just had normal inflation like we probably had for good 25, 30 years, and you were looking at the other figures that we've got now of economic growth being slow, household spending being weak, everyone would be going, yeah, you're going to do a lot of cuts because the economy's weak. But because we've had those previous 2 years, they are kind of sounding like hawks because they don't want people to think, oh, we don't care about inflation, because obviously that is something that is still in people's minds.
Yeah.
But you strip that away and you look at what they're actually dealing with and what they think is going to happen in the next 6 to 18 months, it's kind of, ooh, we need more rate cuts.
One of the big questions we're grappling with now that inflation is easing is how the labour market is reacting. The board's strategy has been to bring inflation down while preserving the gains in the labour market. The judgment was that we could achieve this with a gradual easing in the labour market. But the strength of the jobs market has been surprising. While this is good news for job seekers, the board remains alert to the possibility that it is signalling a bit more strength in the economy, which could delay or stall the disinflation process.
Speaking of that, I was really curious about the RBA being so concerned about unemployment being low, which to my mind is always a good thing. Why is the RBA worried about too many people having jobs?
Look, to be blunt, because they're a bit beholden to a stupid ideology of economics that we very much here at the Australia Institute take issue with. It's that wonderful acronym that people always hear of, the nairu, the non-accelerating inflation rate of unemployment, which is why we call it the nairu, because it's just an awful mouthful. What it basically is about is this belief that there is a minimum level of unemployment that you can have where inflation doesn't sort of start rising. And once you go below that level of unemployment, because you've got more people than the economy can cope with in work, that means there's too many people getting paid, too many people going out and spending money and doing all these things in the shops and investing and all this, that starts sending inflation up, because also wage rises are starting to go up because employers are desperate for workers and they can't get workers. And so it's this view that, we kind of need a minimum amount of people unemployed all the time.
Yeah.
Which I always think is a pretty ghoulish way of thinking about it, especially when we have a job seeker level that is actually keeping those people in poverty. So we're basically saying, look, we need 650,000 people unemployed
In poverty.
for the good of the economy, but also you have to live in poverty, which just, if you're going to subscribe to this view, I think the least we can do is actually have those people living, on a workable, on a livable amount. But the real thing here is, previously the Reserve Bank had thought that minimum level was around 4.5% unemployment, and we're at 4%, so we're below it. So
and to be clear, we're below that rate, and inflation is
coming down. It's not accelerating, it's decelerating. So we've had, and this has been sort of behind a lot of the Reserve Bank's reasoning for increasing interest rates over the past 2 years. Because unemployment had been below that level, they thought, we kind of need to get more people unemployed. So we'll raise interest rates. That will reduce the amount of money being spent in shops. That means the owners will be, turnover's a bit slow. I won't employ any more people. Maybe I'll cut back on shifts. More people become unemployed. We get back to 4.5%, and the Reserve Bank dusts its hand and thinks, job done. But what's happened is it stayed around 4%. And inflation has kept coming down, wages growth is coming down. And it's like, our models don't work now. And so the interesting thing, again, in their statement of monetary policy, back in November, they thought that unemployment was going to rise to 4.5%. Now it's 4.2%. So it's almost like the Reserve Bank is going, maybe we were wrong before. Let's lower what we think the minimum rate is of unemployment. So to our mind, this just highlights how stupid the whole nairu thing is. It's this thing of no one actually ever knows precisely where it is.
Yeah.
And yet they're making all these decisions to raise interest rates, to slow the economy, to try and get people unemployed, because they're kind of guessing that is the level of unemployment we need, instead of what we think should always do. Let's try and get unemployment as low as we possibly can and use other tools all at our disposal to keep inflation down.
So do you accept that you did in fact induce Australians to take out mortgages on the basis that interest rates wouldn't rise until 2024. And do you think you owe those people an apology?
Well, I'm certainly sorry if people listened to what we'd said and then acted on that, what we'd said, and now regret what they had done. So that's regrettable, and I'm sorry that that happened. But if I can just...
So I'm interested in your thoughts on the RBA's performance overall since interest rates started going up, because I think, there has been a lot of pressure on them to reduce interest rates. People are really doing it tough. And, obviously coming out of the pandemic, a lot of people made big decisions about how much money to borrow on the idea that the RBA, wasn't going to put them up for a long time. How has the Reserve Bank been travelling overall in its performance on managing the monetary policy?
Look, I think, firstly, on that call during the pandemic, I'm a little bit hesitant to criticise them too much there, where they were saying, we'll keep interest rates low, because it's easy to forget back then no one had any clue. We really were not thinking a vaccine's coming anytime soon, and it really was sort of panic station. So they made a call that perhaps was in the best interest at the time, but certainly meant when they started raising rates, they, I think, rightly copped a bit of criticism. And also, certainly from us during that time, we think that they got it wrong because they'd misdiagnosed the problem. They were thinking inflation was caused by everyone having too much money, going out spending, sort of that standard excess demand, which we kind of saw during the mining boom when everyone did have a lot of money. There was a lot of tax cuts.
Yeah.
There was a lot of strong wages growth. You had mining, everything. Australia was running hot. And they were kind of treating 2022 and 2023 like it was that, and it wasn't. It was due, as we pointed out, due to corporate profits being rising because companies were taking advantage of the situation to raise prices. We had the supply side issues that coming out of the pandemic, and yet they were acting like, we got to slow the economy. So it was certainly fine to raise interest rates because you don't want the cash rate at 0.1% all the time. That's not good for an economy, certainly not good for house prices. But we think they kept going too high and also have taken too long to cut. They're certainly the slowest of all sort of central banks around the world. I think there's very little here that suggests if they'd cut rates back in December that they would now be looking back and regretting it. In fact, they would be looking back and saying, actually, we were very prescient because back in November we were a bit worried that the economy was slowing. We thought it might need some help, and now we've redone the figures, and it was slowing faster than we thought.
And it did need help.
And it did need help. Instead, they kind of waited till February to say, we got it wrong, and now we're cutting rates. So I think they've been very fortunate in that we haven't gone into recession, that unemployment has stayed low, and I think it's kind of in spite of what the Reserve Bank's done rather than what they want to do, because they have consistently been wanting to get unemployment to rise to 4.5%. That it hasn't is not due to them. As I say, it's in spite of them.
Under this Labor government, inflation is down, wages are up, unemployment is low, and now interest rates are falling as well. This is the soft landing that we have been planning for and preparing for, but we can't be complacent about the months and years ahead. We know that there is more work to do.
The Treasurer, Jim Chalmers, used his press conference after the RBA's announcement to really claim victory for the government. Does the government deserve some credit for how it's managed inflation?
I think yes, and one of the main reasons is because we certainly here at the Australian Institute have been saying stop leaving inflation just up to interest rates and the Reserve Bank. There are a lot of other things that can be done, especially by the government. The government can put in price caps, for example, on rents if it wanted to, or it could put, it can do subsidies, and that's what it did. It did a big subsidy on energy costs, on your electricity bill, and that literally, figuratively, numerically, whatever you want to call it, it brought down inflation. The ABS actually even records how much extra it brought down inflation. It is one of the main reasons why inflation is now at 2.4% and not closer to 3. And it just demonstrates that actually governments do have a role to play in inflation, especially when it's due to supply side issues, when it's due to corporate profits, and not due to the fact, we've been giving out heaps of tax cuts and also
People are spending too much money.
People are spending too much money, which we know is not the case here. What you should do is you help people during this time. You do things that actually bring inflation down, and sure, there'll be a bit of a blip when you take off the subsidy. But the good thing is, by that stage, all other prices have come down in general, and so it's not so much of a problem. Everyone go, oh yeah, that's just a one-off blip, and everything's fine and dandy. So I think the government can claim some credit, especially because they've been criticised by the opposition for what they did. So I think they're right to actually say, what we did not cause inflation to go up. It helped it bring down the Reserve Bank cutting rates, kind of gives us a bit of a tick that what they did was right.
So speaking of the Shadow Treasurer, Angus Taylor, he's more or less said that Australian households have really suffered a decline in living standards, mostly as a result of excessive government spending. Is there any truth to that?
Well, they definitely have suffered a decline in living standards, but it is sure as heck not to excess government spending. In fact, actually, one of the big reasons for the drop in living standards is the withdrawal of government spending from things like the JobKeeper program and all the stimulus measures during the pandemic. Once you take them away, that takes away a bit of household income. But also, when you look at the figures, and this is something I've been sort of noting on dollars and cents a bit when we've been talking about things like the GDP figures, is that the private sector is not doing great. And when the private sector is not doing great, well, the public sector, the government should kind of step in and keep the economy going. If you're saying that the government has been putting too much stimulus in the economy, too much spending, then kind of what you're arguing for is, we should have had a recession in the past year. That would have been better because that would have got inflation down faster. And yeah, it probably would, because we'd be in a recession.
Yeah.
And recessions, generally, you do see inflation come down. So it's, I think, a weird argument, especially to say that, government spending has caused the problem, when at the same time you're saying there's been all this government spending, inflation's been coming down. And it's a case of, well, where's your evidence in a sense? And the only evidence he has is, government spending is keeping the economy going. It's like, yeah, so you don't want government spending to
Would you
keep the
prefer
economy?
a recession?
Yeah, it's I think a tough argument to make, and one that most people I don't think will understand, because it's easy to say government spending is fueling inflation when inflation is going up, but when it's coming down, it's a bit weird. And also, I think they're on much firmer ground when they talk about the fact that living standards have declined, because that is a key thing, but that's more, as much as anything, due to wages not rising as fast as prices over the past 2 years. And we've got a long way to go to recover that, because we have had an exceptional period, and it's going to take, maybe a decade or so to get back to where we were.
Yeah.
Because, it's we fell so far.
So obviously we're in the lead up to an election. How significant is this rate cut for the government in the context of that election campaign coming down the pipeline?
Oh, look, I don't think it would have had Anthony Albanese driving down the road to Yarralumla to see the Governor-General, but he would have got the driver to go out there and start warming up the car, I think. If there hadn't have been a cut, we were not going to see an election until the very latest. I think this now makes an April 1 much more of a live situation, because at least the government really has a narrative now of, we've turned the corner, things are good. Talking about, inflation is, back within the range of the reserve. I mean, who the hell understands that? In fact, most people, to be honest, quite rightly, have no idea what the hell inflation is, and always getting confused when people like me say, inflation's coming down. They go, hang on, I went to the shops and my prices haven't come down.
Yeah.
Inflation, of course, is talking about the growth of prices, and the growth of prices has slowed. And as soon as you start talking about the growth of something slowing, everyone's like, well, I'm lost.
You've lost me.
There's a reason why I chose not to do economics in year 10. So that's why if you're a politician, if you're Jim Chalmers or Anthony Albanese and saying, oh, inflation's coming down, that ain't going to win things. But being able to say your interest rates are coming down, people actually understand that.
It's
because
quite tangible.
It actually is tangible, and they needed that. Now, they would be hoping that on April Fool's Day, which is the next Reserve Bank meeting, that there's another cut. That's hard to, even though I think it should happen. And, as I was saying, they often come in pairs. One of the problems is between now and then, there's not a lot of new data coming out that the Reserve Bank can sort of hang their hat on and say, oh, yeah, new data's showing actually we need another cut, and to justify it. So I don't know about that. But I think with this cut, at least there is now a story that they can tell, and people can actually say, oh, yeah, I understand that because interest rates have come down.
It's a pretty turbulent time globally, not to mention Russia's war on Ukraine continuing, President Donald Trump kind of whacking tariffs on literally everybody and everything, and, the chaos of his administration. What do you think will be some of the things that are keeping the Treasurer, Jim Chalmers, up at night in terms of risks to the Australian economy?
To be honest, I'm not sure whether the risks so much to the economy are keeping up as the political risks. We saw, for example, recently with Trump's, I was going to say threats, but they're not threats, they're actual policy to raise tariffs on steel and aluminium exports from Australia. Even though that is a very small percentage of all our exports, we're talking around 1% of all our exports are steel and aluminium going to America. It was a big sort of media thing of thinking, oh, Albanese and Chalmers and everyone, we need to show that we can defend Australia's interests and all that. And it's like, well, it's not going to affect our economy really, not in a broad scheme of things. But politically, it looks like they have to do something. I think that's part of the thing that might be keeping them up at the night is Trump's going to do something and they're going to think, oh, God, we've got to actually now respond to this thing that really isn't a major part of our economy. But because the media thinks Australia is inexorably linked to America's economy, because they're still thinking it's 1982, they treat it that way. I think I don't think he'd be too worried about the impact of inflation. I think the same with the Reserve Bank. I don't think they would be worrying that tariffs or anything like that are going to have a major impact on inflation because, one, it's Americans who have to pay the higher prices, not us. But they might be getting a bit worried about the fact that Trump is, sacking a lot of people, basically acting as a fascist and doing things that are not terribly good for the American domestic economy. And when the American domestic economy is weak, generally the rest of the world kind of is affected, and certainly Australia does get affected. And so that is less about worrying about, oh, is the Reserve Bank going to have to quickly raise interest rates? It might actually be, no, they need to cut them more because things are a bit slow. And if it really is bad, then the government's like, oh, do we actually have to start doing stimulus measures? And where's my beautiful budget surplus going and all this type of thing? So the risks, I think, are more on that downside of the sense that Trump's just going to screw everything up by tanking the US economy because I can't even work out why, but,
Because he can.
Because he can, or because he actually thinks that's smart. And as a result, Australia has to respond. I don't think that he'd be too worried about thinking, oh, is Trump going to, the tariffs and things like that. Yes, there's a political thing where they have to try and wheel in Greg Norman or someone like that and get him to do a deal. Greg, go play a round of golf with Donald and that'll probably fix it. Or even I've often thought really what they should just do is go and say, oh, you take credit for AUKUS and most people in America probably have never heard of it. And so if he comes out and say, oh, I got Australia to sign this great deal where we're going to give them $360 billion or they're going to give us $360 billion and it's all because of me and claim the win, that's generally the thing with Trump. So economic-wise, I think the worry is that he's just going to crush the world's economy and institute a fascist regime that takes over the globe and sends us into wars. But other than that,
other than
that existential crisis, I think Chalmers would certainly be sleeping better tonight than he would have been on Monday night, worrying about the Reserve Bank going to cut or not.
Yeah, if we didn't laugh, we'd cry. But thanks very much for the analysis, Greg.
No worries. Great to chat and great to have this crossover.
I know. Yay. Woo-hoo. It's so much fun.
The biggest crossover event in podcast history. Well, Australian Institute podcast history.
We would love to hear your thoughts on the show today, and you can reach out to us via email at podcasts@australiainstitute.org.au, or you can find us on social media. We're at australiainstitute.org.au on Blue Sky and at the Oz Institute with an AUS on Insta and Twitter. Our theme music is from Blue Dot Sessions. Both Follow the Money and Dollars and Cents will be back at their regular times next week. I'm Ebony Bennett. Thanks for listening.